So you've heard about all the bad news in the real estate sector. Foreclosures are at a record high. No one's selling. Inventories are rising. It's hard to get loans. But savvy investors know there have got to be bargains to be had. So where are they? And is it worth investing your money? Joining us now are Bob Moulton, president of Americana Mortgage Group. We also have Mike Larson, real estate analyst at Weiss Research. CNBC's Diana Olick is here, and Herb Greenberg joins us as well. Bob, let me start with you, because this has become a very popular topic of dinner conversation, especially among people who fancy themselves contrarian investors. You know, saying nobody wants to get into real estate right now. There have got to be deals. There have got to be deals to be had, whether it's in Florida, in New York. What do you think?
You have to do your homework no matter where you buy. And you have to be prepared to sustain a short-term loss and hopefully pick up a long-term gain. I wouldn't recommend buying a house if you're planning on flipping it. I would recommend on buying it if you're planning on using it for 3 to 5 years as your primary residence, as a vacation home. The numbers are great in terms of financing. We're seeing long-term rates settle down a little bit. Hopefully we'll have another short-term cut on March 18th, which will trickle back into mortgages. And the key thing right now is make sure you're pre-approved for a mortgage. It's very difficult to get financing right now if you have hits on your credit, if you don't have a down payment, if you're not showing the income. But if you're that savvy buyer and you're qualified, you're sitting on a little extra cash, now's a great time to buy. You've seen some hits in markets as low as 2%, and some markets are down as much as 20%.
So, Mike, where would you start looking, do you think? Where are the areas that still have a long way to go, so it's probably not worth looking, and where are the buys?
Well, I think it's important to mention that it's a better time to buy now than it was a year or two ago, but it might be an even better time to buy down the road. I still see a few forces that are obstacles for the housing market and probably aren't going to go away anytime soon, and that's going to affect most geographic markets. You've got the foreclosure issue with the U.S. foreclosures running over 2% rate, the highest ever. We have lending standards that have clearly gotten tighter, which have knocked some potential buyers out of the market, and that means sellers have to lower prices to compensate. And then you've also got things like builders that are continuing to incentivize buyers to step up, and I don't see that going away anytime soon, as well as an economy that's in either close to recession. But
Mike, these are kind of vague timelines that you're talking about here. What do you think in terms of timing? I mean, a lot of people make the point that if they bought at the beginning of the 90s, it took them until the end of the 90s to get back to where they started. Do you think it's another 10-year time horizon? If you bought right now, you would have to hold on for that long?
Well, I don't know that it'll be another 10 years, but I do think we probably have another year this year of mid-single-digit declines in prices, and possibly into 09 as well, and then maybe a gradual recovery as we head into the end of next year in 2010. It's important to remember, though, we're not going to see the kind of run that we've had in residential real estate these past few years for quite some time. So, again, it's going to be a gradual recovery that takes over a number of years.
Diana, are you seeing investors nibbling anywhere? Because this certainly is a popular topic of conversation. People saying, God, I should go down to Florida and buy a bunch of land. They're giving it away down there. But who's really brave enough to do it?
Well, it's all in the foreclosures now, Melissa. I mean, there are many sites up now, places like realtytrack.com and foreclosures.com and umpteen others, which for a small fee list all the foreclosure properties across the country. So it's really easy to go out and see the properties. And that's where perhaps some investors are stepping in. But you got to be careful, because if you are an investor and you're not looking to live there, remember, there was a reason this place got foreclosed on in the first place. And there are some things you should be wary of. A couple of tips on buying a foreclosed property. Number one, eyeball the property, because you know what? Somebody might still be living there, or somebody might be squatting there. You got to know what you're getting into. Make sure there are no taxes or liens on the property that you don't know about. You don't want to be stuck with that. You should know the process, whether you're an auction, a bid, REO property, etc. Research the area, because if there are a lot of foreclosures in this particular area, that's only driving prices down. And also, get a home inspection. That may sound a little silly to most of you, but do it. The problem with buying a foreclosed property, however, though, is, again, there may be a lot of foreclosures in the neighborhood. Prices may be very low in the neighborhood. So if you're an investor, it may take you some time to get it back. But look, if you want to live in the house, perhaps a foreclosed property is great for you because prices are down, and it's a good place to live. Some of these houses are gorgeous.
Yeah, Herb, I want to get you in on this. I have a feeling you're shaking your head and saying that this is like folly, but at the same time, do you think it makes sense to focus on an area that's already been really hard hit, where you've an area like Southern California or like Florida, or do you go somewhere like maybe New York, where some of the prices have gone down but the market is still relatively strong, and it's going to be strong?
Well, you're talking about investors as opposed to people who want to live in the houses, and obviously an investor is going to go where things have been hit. But I have to tell you something. You look here in San Diego, and you look at just the number of houses that are or aren't on the market. There aren't a lot of open houses on Sundays right now. Here we are in the spring market, which means a lot of sellers, the non-foreclosures, are still sitting tight because they don't want to be out there, testing the waters right now. And I think that plays into this also, Melissa.
Well, you just go pick up some of the foreclosures then, I guess, if you're a serious investor.
Then you have to listen to what Diana said.
Yeah, and remember also that everything's local, because I'll tell you, I was out for sport yesterday in the D.C. area doing my Sunday open houses, and there were a lot of folks out there, a lot of traffic, and a lot of things coming on the market. So market to market, it's going to vary.
Interesting. Yeah, the other thing, too, you have to take into consideration is the economic stimulus plan. Once this is implemented, it's going to raise the conforming loan limit from $417,000 up to as high as $729,000.
But people still have to be able to afford it.
Okay. All right, gentlemen, we got to leave it there. Interesting discussion. Thanks for joining us.